What do you expect to see, or what will you be looking for in the minutes from the last Fed meeting released this afternoon?
I don't think you'll see anything. The meeting took place before Powell's appearance with his former two predecessors, and I think all that's in the marketplace by now. So I wouldn't read a whole lot into the December meeting. They released their projections back then, so I don't think there's going to be a lot of interesting news in there, but we'll see. You never know.
So you mentioned the big Powell speech, or the panel that he did with Bernanke and Yellen. I mean, that really felt like a psychological turning point for the market, totally shifting his tone. Is there a Powell put now?
I didn't see anything new there, by the way. I mentioned this on a show a couple days ago, but if you go back and look at what Ben Bernanke said, for example, all the way through at the end, particularly when we were beginning to taper QE3 or end it, he said, we're going to remain flexible, and we're just going to adjust our position according to what develops on the economic front in the U.S. economy. So,
but there was new language,
This is much ado about nothing. And the key thing here is the balance sheet, Sarah. The balance sheet, if you look at the balance sheet, the majority, almost $1 trillion in holdings, is maturing in the 1 to 5 year time frame. That's what is rolling off the balance sheet. That is also where the U.S. government's expanding their issuance, $1.3 trillion the next year. This is where you're really seeing the backup in interest rates. The 10-year rate has come down now at 270, was down to 260s after those comments. So I don't really understand why the market is so excited about this, A, or B, nervous about the Fed continuing to proceed. We'll see. They will adjust. They will be flexible. They will be patient. This is standard Federal Reserve rhetoric. I mean, it's been going on forever.
But in his last meeting, Richard, he used the word automatic pilot, referring to the balance sheet policy. You can't tell me that sounded the same when he spoke last Friday.
Bernanke said the same thing. We're not on autopilot. We're not on a fixed regime. We will adjust accordingly. So,
no, but Powell
what this indicates
said in
to
the
me,
news
Sarah,
conference, we are on autopilot on the balance
he's
sheet,
talking
and then
about
he
the balance
revised
sheet.
that on Friday.
Well, we'll see. But he also indicated that he saw nothing right now to change the course. So, Sarah, I think what this all indicates to me is the enormous dependence markets have on what we did by taking rates to zero, by expanding the balance sheet up to, it's now at 4.1 trillion. We expanded up to 4.5 trillion. And this is what we all feared at the table when we were going through the program. Are we painting ourselves into a corner? Will the markets become hooked on this stuff? And how do we get out of it? And Mr. Powell has the unfortunate duty to unwind, get back to normal as much as possible, and very importantly, prepare for the future when the economy finally turns. And that's the tension. What do you do now for the short term? And what do you do for the long term in terms of having a little prophylactic medicine here in order to cut rates to ease a downturn, which I think the market should be looking at longer term, but they're not. They're looking at short-term gratification. And this was precisely what we worried about at the table in my 10 years there, and particularly when we went through the programs.
Yeah, that's fascinating to hear you talk about that. I wonder, some have said that Powell's mission, whether he likes it or not, is going to be to Volckerize the Fed and wean us from our dependence on asset prices. Should that be his mission?
Well, I think definitely his mission should be to try to achieve some normality here. There's a question of how far you go, how rapidly you go. And yeah, we created an artificial construct. We drove rates to zero. We hammered down the yield curve. We poured on a lot to make sure that everybody understood that. The market bottomed at 666 the first week of March 2009. It ran up 15% per annum until the October peak this year. It's now 13.1% per annum. 10 5/8 of a year run, that's a heck of a record. And so once you're used to that kind of flow and no volatility, which we saw in 2017, complete absence of volatility, eventually it's going to snap back. But, I really think they have a very tough job, and I keep thinking when I hear all these commentaries, what Mickey Mantle said, he said, I never realized how hard it was playing baseball or how easy it was playing baseball until I went to the broadcast booth, and it seems very easy from the broadcast booth. This is a very difficult task that they have. They're earnest about it. They're going to watch it. They're going to be flexible, of course. That's the way the Fed works. But they're going to gear to the real economy, not to the financial markets, unless market turbulence begins to infect the real economy. So
speaking of the real economy,
I'm
Richard,
glad I'm not at the table any further, by the way. I'm glad I'm not there right now. It's a tough job.
Speaking of the real economy, given your presence on the board of companies such as Pepsi and AT&T,
Right.
A, what are you seeing? And B, I'm curious, also given your time in government service, do you see any impact here of the government shutdown over time in terms of dislocations and/or actually impacting economic growth?
I think as it goes on for a longer time, perhaps. We haven't seen a significant impact thus far. But it's just one more factor creating uncertainty. I watched the president last night. I watched the response from Chuck Schumer and Nancy Pelosi. It's very disheartening. And by the way, the only people that poll less popular than the Federal Reserve are members of Congress. They're the least liked people in our country, and you can see why. It gnaws at the confidence level of financial and market operators, and most importantly, the men and women that run real businesses in this country, and it undermines their confidence. So I don't think it's a plus. I hope they get it solved. And whatever they're trying to do partisan-wise, I hope they somehow pull back together. But again, there's not a whole lot that's new there. It's just extreme in our current circumstances. One more comment, by the way. You've seen Charles Evans and James Bullard, that's Chicago and St. Louis, are voters this year. And we'll see. They're fairly dovish, and we'll see how they can impact the committee.